Hello, guys, and welcome to my journal for Friday, the September 11th. This is my first journal of the week, and invariably also the last journal of the week. And that's because on Monday, it was Labor Day in the US, and the US markets were closed. And on Wednesday, I had some glitch. The Loom system was out. Loom is the recording software I use for my journals. So apologies for not posting a journal on Wednesday. And that brings me to today, Friday. And with all the pleasantries out of the way, let's dive into the markets. And boy, oh boy, what a week it has been. All the major equity indices are down for the week, and Nasdaq is now 10% off the all-time high it printed just a couple of weeks ago. But at the close today, there was some buying activity going into the close, and this might offer a glimmer of hope to the bulls out there. And the bulls might also take some comfort from the market internals today, because at the close, the ratio of advancing stocks to declining stocks was 1.13 on the New York Stock Exchange. So for every stock that was sold, 1.13 were bought. I know it's not much, but if you're a bull, you clutch into anything at all, right? And this is some glimmer of hope. That said, the Dow closed up today, having been down for most of the trading session. The S&P 500 was flat. It was up about 1 point. And the Nasdaq was down only 0.6%. And I say only 0.6% because intraday it was down over 2%. But then into the close, some buyers came in and bought it back up, and it closed down only 0.6%. And given how the markets have performed this year, I was interested to know how some of the best known money managers or best investors have performed. And in my books, there is no better known investor than Warren Buffett. Well, this year, Warren Buffett liquidated his airline stock position, and he also liquidated his banking positions, and I believe he exited his airline positions at a loss. And if you want to know what he bought, well, Mr. Buffett, the most bullish American, and a man who has gone on the record to say he will never short America, he did not put the money to work in US value stocks. Instead, he bought gold. That's right, Warren Buffett bought $560 million worth of Barrick gold stock. And I know that is a small position by Warren standards. Berkshire Hathaway has a position in Apple, which is massive. It has 89 billion with a B. $89 billion position in Apple. So $560 million in Barrick Gold is minuscule in comparison. But his gold investment is a significant departure for a value investor. An investor who had previously said he disliked gold and he preferred assets that have a cash flow and paid dividends. And gold does neither of those. Gold doesn't pay dividend and it doesn't have a cash flow. You just buy the gold and park it and wait for it to appreciate in value. So buying gold by Warren is a big departure. Warren also put a lot of money to work in Japanese conglomerates. And he bought Japanese conglomerates that have a big exposure to the Chinese market. So in a way, if you like, it's not only a bet on Japan, it's also a bet on China. Now, I don't know the number he invested in Japan, but from what I heard, it's a significant investment for Berkshire. And I'll leave you to draw your own conclusions about the implications of Warren's new investment theme and what he says about his view of the US markets. Moving on to the VIX. So the VIX was down big today. The VIX was down about 9.5% to close at 26.87. Earlier in the week, the VIX spiked above 30. I think that was on Tuesday or Wednesday. And as the markets appear to be in a stabilization mode, if you like, stabilization mode today in particular, there appeared to be not a lot of protection buying, but the VIX remains above 20, and this still signifies some uncertainty and some fear being baked into the market. There are now 7 days left for the September contract to expire, and there are 35 days for the October contract to expire. I had no new trade ideas today, but I closed out a position which I will cover next. And that takes me nicely onto my open positions. So we hit a new milestone in vertical spreads today. And no, we didn't make our first $1 million profit, but we took our first full loss on a trade. Now, some of you might be wondering, why am I calling it a milestone? Or why am I downplaying the loss? Or why am I not downbeat by taking a loss? Well, there are a few certainties in life. Death and taxes are the main ones. If you're alive, you're going to die one day. And if you're alive and you're working or run your own business, you have to pay taxes. And one of them, if you're a trader, if one is trading, you can add to that list a trading loss. A trading loss in the career of a trader is a certainty. And I must say, I've been looking forward to this day because taking a loss reinforces the notion that we are in the business of taking risk. And that risk is some losing trades, which will happen from time to time. There is no such thing as a trader who never takes a loss. And my approach to trading in general is to divorce emotions from my trading. I do not get elated when I have a winning trade, and neither do I get deflated when I encounter a losing trade. Instead, I review the losing trade and find out what I could have done better and learn from it and move on to the next trade. The best traders in the world have losing trades. I mentioned Warren Buffett earlier, who cut his airline stocks at a loss. And yet still, in my books, Warren Buffett is still one of the best investors of the last generation, or maybe last 2 generations. And even with this one losing trade, we're still on track for a positive month. The bottom line of what I'm saying is I do not allow my ego to get in the way of me making money. My objective is to make money at the end of each month. If that entails taking a loss on one trade, so be it. You can't make money on every single trade. I'm a tennis fan. I watch a lot of tennis. To win a tournament or to win a Grand Slam, you don't need to win every single game, and you don't need to win every single point. What matters is the set. And in my books, what matters is my P&L at the end of the month. The individual trades are insignificant individually. Collectively, yes. So you have one losing trade, 3 profitable ones. And that's what I look at. And for those who participated in a question I posed in the trading forum, the trader chat forum, I was asking, how do you benchmark your success? In my case, I look at the indices. The benchmark index is my benchmark. So this month, the Dow, S&P and NASDAQ are going to be down, or even from last month. As long as I beat that benchmark, I am happy. Now, that said, the losing position in question is CRBP. So let me review that position and see what I can learn from it. So this is the CRBP position. This position started on the 10th of August and I sold the September 5 2.5 put spread. Excuse me. The price of CRBP at the time was $6.73. Implied volatility was 86.3. And there were 39 days until the September contract expired. I got filled for $1.40. And it was a good trade. If I could wind back the clock, I would put this trade on again because on paper, everything looks good. IV is high, no earnings, and I couldn't find any news. I think I mentioned that in a couple of journals on Friday, or even intra-week. I was looking for news as to why implied volatility was so high. I couldn't find any. So fast forward at the end of week one, CRBP was trading around the $697 mark. IV was still high, 87, and my P&L was positive $13. At the end of week two, CRB had moved up to $791. IV was still high. My P&L $34 per contract, and I recall mentioning the high implied volatility, and I also mentioned that I did some research to find out why it was high, and I couldn't come up with anything. At the end of the third week, CRBP is now sitting at $9, IVR 87, and P&L $65 per contract. So at the end of week 3 weeks into the trade, IV is still very high, and I mentioned that. And here's the thing I would learn from this is when IV is this high, 86 is very high, and there are no earnings announcements. And the other thing I should have really taken into account is this is a pharma stock. This is a biotech. These biotechs and pharmaceuticals, they're always doing all sorts of tests, even pre-COVID-19. They always have some drug they're going to trial, and a lot of times you can never find that in the news. So I looked for the news, I couldn't find it. But given that IV was still high with 3 weeks into the trade, and I couldn't explain why IV was high, I think at this point here, I should have cut my position in half. I should have taken half off the table. So that's the one thing I'm learning from this. If I can't explain why IV is so high with 3 weeks to go and it's not moving down at all, there must be some binary event that I am unaware of. And even if I take all the necessary steps to find out what it is and I still can't find it, I shouldn't just assume that it doesn't exist, because the market always knows better than you. So the market was telling me there was something going on, some binary event, and I discounted it. And at the end of week 4, it was still high, $9, and so the price was at $9.25. IV was at 89, and even if you look at this, compare week 3 to week 4, that's kind of red flag there. CRBP was at $9.12. Here it's gone up. IV 87, IV 89, and the P&L has gone down to 52. So there was clearly something going on here, and I think I should have been more aggressive in at least cutting half the position, taking half of it off the table, and leave the remaining half if I didn't want to close everything down. So that's the one thing I think I'm taking away from this position as a learning point. And today, earlier this week, they came out with the test results of some drug they'd been doing a trial on. Nothing to do with COVID, something else. And the results were not as they expected, and the stock got slammed. It got slammed. It was down 70% in one day, and this is what implied volatility crush looks like. So it was IV, it was 86, it was 87, it was 89, and now it is 39. It got crushed completely. So that's the losing trade, and that's my takeaway from that. If IV is persistently high, no earnings, and I don't know what it is, and it's a pharma stock, a pharmaceutical or biotech, then I'll take some money off the table. So that's that one. And that takes me nicely onto my open positions, not other, because that position is now closed. I now have 5 open positions, 2 in the September contract and 3 in the October contract. And the first one is in FSLY. So on this one, I sold the 80.75 put spread for $1.80. Let's see where FSLY closed today. FSLY closed at 76.4. And last week I had a small negative P&L, but this week that negative P&L got bigger. And that's because the market sold off, 1, and 2, the standoff between China and US over TikTok intensified. So Beijing came out today with a statement about that China would rather see the US TikTok close its operations than see it have a forced sale, as Trump is alluding to. FSLY earned about 12% of its revenue from TikTok last quarter, and it's understandable that it sold off on that news. That said, nobody knows what the stock is going to do next week. However, the 80 level has been a magnet for buyers to come in, but that didn't happen today. So the major risk in this trade as we go into expiry week is the risk of assignment. The 80 put is now in the money, and someone could exercise the option and put the stock to me at $80. Ideally, I would like to close this position early next week, and I'll be watching it very closely on Monday, and any bounce above 80 would prompt me to close the position even at market price. So if it bounces above 80, I'll be looking to close this position on Monday, and I'll disregard the profit target I have set for it. But I'll send a notification. I'll send an alert as soon as that happens. Trade. The second position is in ARKK. ARKK, and this one I sold the 90.95 call spread. ARKK. ARKK closed at 85.35. 85.35. My short 90 call is currently out of the money, but with the expiry around the corner, I would also like to close this position out very early next week, or at the very least on Monday I would take half of the position off the table. Implied volatility is pretty low. It's gone down to about 58, but with 5 days to go, on Monday it'll be 4 days to go. There's not much theta decay left in it, so I'll be inclined to take off half of the position in ARKK. I think I bought 6 contracts, so I'll take off half of. I will sell 3 on Monday, or I might decide to sell everything. Depends on what price they're trading at. So those are my 2 open positions in the September contract. In the October contract, I have 3 positions. However, only the BABA position has been open for a week. These were opened, where's the trade? 8th of September. So these have SE and PDD have only been open for 2 days or 3 days. So I'll review those positions next week. BABA, Alibaba, I sold the 260, 255 put spread. Let's see where Alibaba closed today. So Alibaba closed at 271, and I'm short the 260 spread. So the 260 put strike. It closed at 271, and I sold the 260 put. So my Short strike has not been tested, it's out of the money, and at this point, no action is required. And like I said, the two positions in SE and PDD I shall cover next week. And that takes me on to my watch list. On my watch list, I have only got two items for today, NKLA and Spotify. NKLA, I was actually looking to put on a position on this, but the IV dropped intraday to about 40 something, and into the close it has spiked up again 61%. So that's on my watch list for next week. If I close one of these positions out and free up some money, I should be able to put on another trade. And SPOT, Spotify has implied volatility of 57. And the only reason why I haven't put on a position in Spotify, because I like it, it was actually higher than this, is the strikes. So the strikes on this thing are $10 wide. And I know when I put on the 2.5 widespread, a few people didn't take it because they had to adjust their position size. So you can see here clearly the, I go to October, you can see the strikes, they're about here $10 wide, which means if I put on a position here for the forum, there will have to be some adjustments to the number of contracts you trade, i.e. you'd have to cut your allocation into two, cut it by half, because it's a $10 widespread and we normally trade a $5 widespread. So that's the only reason why I haven't put on a position on this. And I have already got 3 positions in October, so I'm hoping to get another 2. But assuming I didn't have any position at all in October, I would have been inclined to take this Spotify on even with a $10 widespread. But given that I've already got 3 positions, which meet my criteria, these are all $5 widespreads. I'll look to find another 2 $5 widespreads. And that brings me to the end of my journal for this week. But before I go, here are the highlights to take away from today's journal. Early next week, I'll be looking to aggressively close the September contracts. And that could mean moving up my exit price away from what I set as my targets. But if I do that, I'll post an alert in the forum to let you know. And another thing, we launched our YouTube channel last week. So I want to say a big hello to you guys out there watching on YouTube. I hope you enjoyed watching my journal, and I hope you can stop by in the forum and see what we're doing. And to those who have already signed up from YouTube, I believe we have some members who've signed up from YouTube. A very warm welcome to the Vertical Spread community. I'll ask you to please feel free to say hi in the forums and introduce yourself in the forums in your own time when you're ready. Feel free to ask any questions whatsoever. There are no silly questions here. All of us ask silly questions all the time. Silly doesn't exist here. So feel free to ask anything at all. And have a great weekend, everyone. And I shall see you next week. Goodbye.